One of the first real estate investing strategies that newer investors usually get introduced to is something called the BRRRR method. Buy, rehab, rent out, refinance, and repeat. Now, throughout the pandemic, when the real estate market was very hot, the BRRRR search term also rose a lot in popularity. But nowadays, with a much more volatile market, we often get asked if the BRRRR strategy still works in Toronto. The short answer is it could, but be cautious, and it's probably going to take longer than it used to. So in this video, I'll dive more into this and then give you our best tips on BRRRRing in Toronto. But before I do, check this out. This is a heads up that you can get our complete Toronto real estate investing guide for free on our website. You can see things like a breakdown of typical costs, rents, appreciation, sample financials that you can change up to see how it affects your returns, and even try out a quiz to see what might fit you best. I'll put a link to the free guide in the description below. Don't forget to like this video and subscribe to our channel so you don't miss other content like this made just for real estate investors in Toronto. Let's take a look at how the BRRRR is done. Typically, you'd buy a house that needs a lot of work at a deep discount. And after putting in substantial renovations to put it up to rentable state, you would then rent it out and then go back to the bank to get it appraised. And if you get a good lift on the property, then you'd be able to refinance the home with the banks. A successful BRRRR would need to have enough cash pulled out from the refinance so that you can repeat this process with the next property again. Now, let's take a look to see how the numbers worked with BRRRRs throughout the pandemic. For example, an investor might have bought a property for $900,000. Market comps were $1 million, and so the investor got a $100,000 discount because the property needed some work. They ended up putting in $80,000 of cosmetic renovations to upgrade it, and so the actual value add here was only $20,000. But they got lucky and saw huge increases in market appreciation during the pandemic, and so the property saw a 30% increase in market value in under a year. And because of this, they were able to get an appraisal of $1.3 million and pull out $320,000 to repeat this process again. So this investor might have thought they did a successful BRRRR here, but in reality, it was from the hot market, and it wasn't much different from buying a turnkey property and then waiting some time for you to refinance and then do it again. So once you understand all of this, you might see the increased risk in BRRRRs, especially when you're not BRRRRing correctly. Going back to the previous example, if you took on the same renovation in today's more volatile market, where real estate prices might see a drop of another 10%, you would end up with a loss simply because market prices came down, and the BRRRR definitely won't work until the market recovers again. But more recently, we've been seeing clear signs of a bottom and more buying action. And from the latest February data, we can see that this is finally taking prices higher. And in fact, we saw double-digit price growth in February, month over month, for 416 houses. But the buyer pool who's driving prices up aren't actually investors. When it comes down to it, end users just simply can't wait anymore since they've been waiting for months already. And when you combine pent-up demand with limited listings, prices naturally creep up. Now, here's the interesting bit. BRRRRs fundamentally don't actually work as well if there's more demand for homes that need work, which end up reducing the value add potential for renovations. Now, the reason why it did so well when prices were on a rise quickly was because of market appreciation. But now that market appreciation is going to slow down and demand for homes that need work is lower because there's less buying from investors, we've actually been seeing a bigger price gap between homes that need a lot of work and renovated homes. So for real estate investors who are up for taking on projects, this can present a very interesting new opportunity if you are up for big renovations in exchange for more value add gain potential, which is what BRRRRs are all about. So here's what numbers would look like if you end up getting one of these deals. Let's say you end up buying a property that needs $150,000 of major renovations for $850,000. Post renovations, this property is worth $1.1 million, and so the value add here is $100,000. Moving forward, we don't expect very high appreciation, but it might be safe to assume that real estate prices might continue to grow with inflation at 3%. So once you add in that 3% expected annual appreciation, your property value might be worth $1.13 million in a year's time. And at that point, you can pull out 80% of the extra property value, and then you would be left with $224,000 of capital to reinvest in your next property. This might still not be enough for another BRRRR, but it's definitely going to get you closer to that point compared to if you were to take on a smaller renovation. The other important thing is to be prudent about the renovations you put in. With experience, you'll know what types of renovations to take on and how to strategically lower your total renovation costs. And this kind of knowledge can make a pretty big difference in terms of the value add on your renovation. And because we are in more volatile times, you have to understand that there is an increased risk that BRRRRs might not work well in the short term if prices fall more. And while you wait for the market to stabilize, always make sure cash flows are strong enough so that you can wait it out and eventually cash out, refinance, and repeat later down the road. If you want to talk strategies with a real estate investing expert in Toronto, let's chat. We're a real estate sales brokerage that focuses on investing in houses and multifamily homes in Toronto, and here's how it's like to work with us. First, we'll do a discovery call with you so we get to know each other more and help you get your financing ready, and then we'll teach you how to analyze deals. Once you're set, our sales team will work with you to find the best opportunities on the market and eventually help you buy the best one for you. Houses typically need a bit of renovations and we'll help you with a detailed scope of work and contractor connections. And then once you're ready to rent out the place, we also have leasing and property management services if you need it. So if you want to learn more about any of this, just head over to our website at the link down below. Again, don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. You can also head over here to check out our other videos. Thanks so much for watching and see you in the next video.